The debate between leasing and buying a car is as perennial as the seasons. Each option has its fervent proponents and its unique advantages and disadvantages. Which is the better financial decision? To truly understand, we need to break down the costs and benefits associated with each choice, factoring in both tangible and intangible elements. But before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. Leasing, low monthly payments and latest models. Imagine driving off the lot in a brand new car, the smell of fresh upholstery filling the air. The thrill of a new vehicle is undeniable, but this excitement comes with significant financial implications. Leasing a car is akin to renting an apartment. You get to enjoy the latest model with all its features for a set period, typically 3 years. During this time, you make monthly payments that cover 4 main components: depreciation, interest or finance charges, taxes, and fees. Depreciation accounts for the decrease in the car's value over the lease term. For instance, if a car worth $30,000 at the beginning of the lease is valued at $20,000 at the end, your payments cover this $10,000 loss. Interest charges are essentially the cost of borrowing the car's value from the dealership, influenced by economic factors and the dealership's terms. Taxes and fees add to the total monthly payment. Leasing is attractive because it generally results in lower monthly payments compared to buying. This lower cost stems from the fact that you're only paying for the car's depreciation during the lease term, not the entire value of the vehicle. Consider a scenario where you lease a Toyota RAV4 Hybrid with a suggested retail price of $31,385. With a typical $3,000 down payment, a 3-year lease might result in monthly payments of around $394. Over the lease term, you'll have paid approximately $17,018. At the end of the lease, you can either return the car or buy it at its residual value, which could be around $20,887. If you choose to buy, the total cost over the lease and purchase period might be approximately $38,272. Key considerations in leasing: mileage limits and wear and tear. Depreciation is the single largest cost component in a lease. If a car depreciates faster, your payments will be higher. For example, a $30,000 car depreciating to $20,000 over 3 years means $10,000 is split into monthly payments. Different cars depreciate at different rates, impacting lease costs. Interest rates on leases can vary widely based on credit scores, market conditions, and the dealership. A lower interest rate means lower monthly payments. If your credit score is excellent, you might secure a rate as low as 1–2%, while a lower score could mean rates upwards of 5–6%. Taxes are generally based on the monthly lease payment and may include state and local sales tax. Additionally, fees such as acquisition fees, security deposits, and documentation fees can add to the initial cost. It's essential to understand these fees to avoid surprises. Typical leases allow for 12,000 to 15,000 miles per year. Exceeding this limit can cost 15 to 25 cents per mile. For a driver who goes over by 5,000 miles, this could add up to $250 in penalties by lease end. Normal wear and tear is expected, but excessive damage can incur additional fees. Scratches, dents, and interior damage beyond normal use will likely be charged at lease end. Keeping the car well maintained helps avoid these costs. Leasing suits certain lifestyles perfectly. For instance, if you love having the latest technology and features, or if you drive relatively few miles annually, leasing might be ideal. Business owners also benefit from leasing, as they can often deduct lease payments as business expenses, potentially saving money on taxes. Additionally, leasing high-end luxury or European cars, known for high repair costs and steep depreciation, can make financial sense. Buying, long-term savings and ownership benefits. However, if you view a car as a long-term investment, buying might be the wiser choice. Financing a car involves making payments on the entire purchase price over a longer term, usually 5 to 6 years. Once the loan is paid off, the car is yours to keep. The major advantage of buying is that you eventually eliminate monthly payments, potentially driving the car for years without the burden of a car loan. Let's compare the financial implications of buying the same Toyota RAV4 hybrid. Suppose you make a down payment of $3,000 and finance the remaining $28,385 over 5 years at an interest rate of 3%. This would result in monthly payments of approximately $511. Over the loan term, you'll pay around $30,660 in principal and interest. After 5 years, you own the car outright, and any further use of the vehicle is essentially cost-free, barring maintenance, insurance, and taxes. Ownership provides the benefit of no mileage limits and the freedom to modify your car as you see fit. This is particularly appealing for those who drive a lot or plan to keep their car for an extended period. Over time, the costs of ownership can be significantly lower than leasing, especially if you maintain the car well and keep it for many years. Comparing the costs. Leasing versus buying. Comparing the costs of leasing versus buying a vehicle is crucial for making an informed decision. To do this, let's examine the total costs over a typical period, such as 6 years, which includes a standard leasing term followed by another 3-year lease or continuing with the owned vehicle. For a leased vehicle, the initial down payment is $3,000, with a monthly payment of $394 over a 3-year lease term, bringing the total cost over 3 years to $17,018, including the down payment. Assuming you lease a second similar vehicle after the first term, with another down payment of $3,000 and a monthly payment of $394, the total cost for the second 3 years would also be $17,018. Thus, over 6 years, leasing would cost approximately $34,036. In contrast, for a purchased vehicle, the initial down payment is $3,000 with a monthly payment of $511 over a 5-year loan term, bringing the total cost over 5 years to $33,660, including the down payment. Assuming no further car payments after the loan is paid off, the cost for the 6th year would only include maintenance, insurance, and taxes, estimated at around $2,500. Therefore, over 6 years, buying would cost approximately $36,160. While the leasing option might seem slightly cheaper over the same period, it's important to remember that at the end of 6 years, the buyer owns the vehicle outright, while the lessee has no asset to show for their payments. Additionally, the buyer's costs drop significantly after the loan is paid off, leading to potential long-term savings. Making the decision, lifestyle and financial goals. When deciding between leasing and buying, consider your financial situation, driving habits, and personal preferences. Leasing might be suitable if you prefer driving a new car every few years, have predictable driving patterns, and want lower monthly payments. Buying is often better if you plan to keep the car for a long time, drive a lot, or want the freedom to customize your vehicle. If you drive many miles annually, leasing might become more expensive due to mileage penalties. On the other hand, if you enjoy the latest technology and don't mind perpetual monthly payments, leasing could offer a continuous stream of new vehicles. Business owners might find leasing advantageous for tax purposes, as lease payments can often be deducted as business expenses. In contrast, if you see your car as a long-term investment and prefer to avoid monthly payments eventually, buying is likely the better option. Owners can drive as much as they like, make modifications, and ultimately benefit from not having car payments after the loan term ends. Although leasing may appear cheaper over 6 years, purchasing a vehicle offers long-term financial benefits and ownership. The buyer's costs drop significantly after the loan is paid off, resulting in potential long-term savings. Thank you for watching. If you liked our video, then hit the subscribe button to never miss out on any of our videos. See you next time.